We're looking at a daily chart of the Nasdaq on the day before the 4th of July. So happy Independence Day to all those residing in the United States. The Americans will have tomorrow off. We had a abbreviated session today. We'll be off tomorrow and have a regular session on Friday and have a non-farm payroll report Friday morning. But the Nasdaq is the king. It's King Kong right now, and it's really surprising me that it's showing so much strength. It was up another 159 points today, or 0.88%. You could see it closed at an all-time closing high of 18,188 points. If I just look at the monthly, we can see there's only been 3 days in the month, and it's already up 2.5%, 2.57%, 455 points. And some people say that it's overheated, and it's going to do what it wants to do, so you can't argue with it. There's the weekly, you can see the rally here, strong, powerful rally. How many weeks in a row has this been up? And you can't fight the tape. The trend is your friend. Don't fight the tape. It'll eventually pull back in, but until it does, we're going to take advantage of this strong Nasdaq. Why not, right? You don't want to argue with the market. I know there's still a lot of bearish sentiment out there that people don't believe this market. They're very skeptical, looking at macro data, and you can always look at macro data to fit your narrative, but I don't have a narrative. I just kind of follow the market here, and the Nasdaq's telling me it wants higher, with this all-time closing high today. 18,188 is the high, and it closed at 18,188. So that is your hammer candle when it closes at a high. If you want me to zoom in on that, I will for you there. So there's no gaps in this chart. It's just closing. There's 3 hammer candles in a row in July. So the institutions are buying stocks, and I would just follow the institutions. It's pretty simple, until things change. We are retail traders, and we can get in and out quickly. The institutions can't. So when it starts to crack and they want to start getting out, we'll know to get out in plenty of advance. But for right now, they're buying, so let's just follow them. All right, that's my rant for today. And since I'm looking at this, I want to show that it's 1.9% above its 10 EMA, the green line, 3.3% above the magenta line, and 7.6% above the 50, which is the red line right here. So the 21, 3.3, historically, I would think that would, it's going to come back at some point, but until it does, just ride it. Ride the trend, okay? It's just like a wave. You ride the wave until it comes in into the surf, and then get out and ride another wave. So anyway, I'm going to look at some stocks because I'm a stock guy. I don't really particularly play the index, the QQQs or the TQQQs, if you will. But Apple, this one made a high of $220.20. Just pulled back to the 10, found support, pulled back again, found support. Now it's bouncing higher. I kind of like it there above 220. I like this little pat. It's not really a big base. Like if you go to the weekly chart, you can see this big base on base pattern. This is just like a little 3-week pattern here. But if the stock wants higher, I'm going to ride it. I don't believe I own Apple. I'd have to check some of my retirement accounts, but I don't believe I own Apple at this time. But it sure does look enticing there at 220. And as long as it gets support, if you don't own it, you want to buy it, I would like to get it closer to that 10. The green line is 3.2% above the 10, but the way the market's going might not give you that opportunity. Microsoft, another one of these magnificent 7 names, it's just grinding higher. Every day I think I just say, this is a Kelly Slater stock. It's just riding the moving averages higher. So there's nothing to do here, but just let it work for you. Sometimes, we're our own worst enemy. We want to be tinkering with our stocks here and there. Just let Microsoft go, let it work. They're going to report earnings in a couple of weeks here, the 23rd. And, these new data points, to me, I think they're going to be pretty strong. I think that's what's going on here is we're pricing in, pretty good numbers for our AI stocks, the semiconductors and software names. Okay, so that's enough for Microsoft. Now, Meta, I still have this one on our ready list there. It's got that 514 paint by numbers buy point. I like it above 500. I don't like it below, but you can see if you look in here that it's still, being supported by the 21. Any stock that's being supported by the 21, that's a positive sign, right? You don't want to see them crashing below because then they're going to make a trip to the 50 at the very least. So yeah, the history shows that when they slice through 21, even in a strong market like this, there are a good chance they're going to make that trip to the 50. So Meta, to me, above the 21 looks fine. Once again, they're going to report here in a couple weeks, the 31st. So that would be 28 days from today, 4 weeks from this Wednesday. Okay. So now you know when Meta is going to report. Amazon hit that 200 number like a wall. It was rejected like Matambo. Bezos said he was selling some shares. That's no reason to sell a stock. Like Jensen Huang and Charles Liang at SMCI and Jeff Bezos. These are founders of companies they've had for 20 years and more than 20 years, 25 years, and they have a ton of stock and they have to, sell to diversify, buy some real estate, buy another yacht, who knows. But to have all your money in one place isn't really wise either. So, he sells stocks and lives a lavish lifestyle, and good for him. But that's no reason for you to sell it. Just because these founders like Jensen and Jeff Bezos are selling. Anyway, yesterday it ran up a little bit above 200, rejected today. Something tells me it's going to be knocking on that door again and in the not too distant future, like probably Friday. But anyway, yeah, the news is Bezos is selling, so the sheep have to sell. All right, Google or Alphabet. Once again, this looks a lot like Microsoft, where it's just surfing its moving averages, finding support. When I say surfing, that just means it's finding support, trading higher with the trend. And as long as the trend is higher and it's above the moving averages, your stock is working, you're making money, there's nothing to do here. Maybe you want to add or something. I think that 178 area was a place to add. I certainly wouldn't go 100% right there, but if you did, you're in the money and doing fine. But if you bought this when it was back near its base and trended higher and then got another pullback to a moving average and gave you another add-on buy point. But once again, like Microsoft, these things are just printing money here for you. So don't mess with them. Let them work for you. Tesla is one that I've been talking about a lot lately, and people are getting real excited about it. Last week it traded above its downtrend line. I think that's when I put it on my ready list here, and it certainly has been a big winner since. I don't know the percentage, and I don't even know the day I put it on the ready list there. It looks like the 26th, maybe about 190. I think it was 192 or something. But anyway, it's up to 246 now. So good trade. I mean, if you want to hold it long term, if you're a Tesla bull and think it's going to, I do think it's going to pivot to an energy company and not rely solely on electric vehicles. But you could see it's up, nearly 25% this week. That's a good week for 3 days of work. So good for the Tesla longs. And then the last one I'm going to show is NVIDIA. I bought NVIDIA back today. Why? Well, because it came down to its 21. It just formed a little, first of all, it ran up 46%, right? If you rode that, I was getting a little nervous because it was just too good to be true, right? So it pulled back these 3 days at the 21, formed a little shelf type pattern. Today bounced off the 21. So NVIDIA is the king of AI. It is, like the leading stock in this market, is a barometer for this new bull market, the AI revolution, which I think is going to go on for quite some time. So I don't want to be out of it, but I do think, this pullback was very healthy for it from 140 down to 118. I think I showed you on that 15-minute chart how it just kept finding support, retesting, and now level of support and trade higher. So is that probably the bottom there? What did I say? It was a 118, something like that. Yeah, 118, and then retested on this day, which was what, Monday? Yeah, 118. So yeah, NVIDIA looks good. Obviously, that's one of your stronger stocks in this new bull market. All right. So that's it for all the Magnificent Sevens. I've got to get to some of these semiconductor names today. There was news out that Nancy Pelosi, the greatest trader of all time, she was invested. I don't know if it was call options or just stock. And I don't really pay too much attention to what other people do, but I was all over Twitter. And okay, so Broadcom was up 4% today. They're gonna split their stock here pretty soon, and next week, I believe, or Monday, I think it is. And yeah, close at 98% of the daily range. So that's a nice three hammer candles. People will call them like three white soldiers or whatever, but looks very bullish for Broadcom. Another one that I have on my ready list, I didn't have Broadcom. I do have ARM at that 164 level, and I like how it pulls back, finds support, bounces, pulls back and bounces. I suspect it'll probably continue to do that, but eventually trade above that. For certainly 164, it's already above the 164, and then eventually the 177 level. Once again, as long as these moving averages are trending higher, and you can see how steep these are, and it finds support at these moving average, it's going to trade higher. You just got to be patient and hold on. I know people are really impatient these days as the stock goes down 1 day or 2 days or even 3 days like it did here. People get really impatient, but this didn't do anything wrong. It just made a high and then came back, essentially to its 10 and found support. So any stock trading above the 10, I mean, that's a really strong stock. Just got to be patient. You have to know the character of your stock as well. I'm going to get to that in a minute. And somebody asked me about bases, and so I've got to get to a bases. I got to write that down. I'll probably do it on Saturday when I have time to stretch out. All right, so UCTT, this is another one of these small cap. You can see 2.3 billion. Small cap had this double bottom base, and now it's breaking out and running higher. So this one looks good as well. I would love to see the small cap start running and starting to broaden out this rally, and not just the the mega caps. And but today we did see software. We saw the miners, we saw semiconductors, and this is just another one of the semiconductors that are running and looking good. Okay, I'm going to get to a couple others here. I did do ARM, I did AVGO, Broadcom. This is Applied Materials, another one that made a new high, pulled back to the 21, found support. That looks good as well. A couple others that are just, I don't know, as old steady eddies and standbys when you think of semiconductors. This is Qualcomm, broke out of that double bottom base. We had that at 175.99. It was this earnings report on May 2nd where it ripped higher nearly 10%, ran up to 230, now pulled back to the 50 for the first time since the breakout, and the low is like 193, and now it's a bounce like $10. So that's like more than a 5% move for Qualcomm. So that looks pretty good. That's what you want to see, support of moving averages. AMD is just forming a base here, doing nothing wrong. They have to form bases over time. There's a lot of different types of bases. Like I mentioned just right now, double bottom bases. There's flat bases. There's a cup with handle. There's cups. All sorts of different patterns. And it doesn't really matter to me the type of base, as long as it makes a base. Stocks need to form bases because they have profit takers, people who just want to get out of the stock, and then you get new buyers that come in. So anyway, those new buyers need to come into AMD, and they're going to report on the 30th. So that is what? What's today? The 3rd, 27 days from today. So anyway, that's going to be a big week, right? Meta and AMD, there's going to be a bunch of big ones. All right, I'm going to get away from these standard ones. A couple that I own and I like. This is CAMT, CAMT, a diagnostic. I think I put their earnings report on our mcstockcharts.com when they reported earnings. If not, let me know and I'll put them back up there. There's just the earnings slides. This company is doing really well, taking market share and reporting strong sales and earnings growth number. And the stock is responding. And if, once again, if it doesn't take a genius to figure out, hey, it broke out, it pulled back to the 21, found support. ripped higher, came back to the 21, found support, ripped higher, probably come back to the 21. But every time it comes back to the 21, it's a lot higher. It's like 10, 15 bucks higher. So by the time CAMT comes back to the 21, it'll probably be, $125 instead of 100 or 110. All right. So that one is strong. VRT is another one that was a strong stock. I think it's just forming a base, but today it bounced a little bit and got rejected right there at the 50. So 3-day bounce here, rejected at the 50. We'll have to just wait and see, but it's had a massive run, and I believe it's up like 250%. Yeah, 275% in the last year. So it needs a breather. So let it breathe. All right. If you don't want to play, individual names like NVIDIA, AMD, Qualcomm, Applied Material, Micron. You could buy the SMH, and this alleviates any earnings risk, right? Because it's not going to have an earnings blow up and fall out, 20%. But this, you can capture some of those quality names. The problem I have with ETFs is that you get the bad with the good. So I'd rather just own the good stocks like NVIDIA and Broadcom and Micron. And the other one is SOXL. This is a 3 times leverage instrument for the semiconductor group. But like I say, I'd just rather own the individual names. 3 times leverage, it was up 5% today. So this one really moves. And how was that daily range today on SOXL? Close at 77% of the daily range, so not bad. Anyway, that's it for the semiconductor names. They're certainly strong, and there's a lot of them. I could go through a bunch more, but I'm going to stop there because I want to get to some of the software names that I have on my ready list. You could probably, see why I have this on my ready list. This is just like a consolidation pattern. This is a nice base. This is what I like when I look for stocks. I want a stock that has proven that it can move. You can see it broke out of this base and just ripped higher, right? So now it's forming another base here. And I really don't care if they're cup with handle or flat base or double bottom, just a base. That's all I want. Let's take a look at it on the weekly. Yeah, you can see this one can really move, right? Look at how much this has moved. You can see the earnings line heading due north. You can see the consolidation pattern right here. This thing's ready to bust out. And it's trading tight within the base near its moving average. Like yesterday would have been a perfect day to buy when it pulled back near its 10. I don't know, a perfect day, but it would have been a good day to buy if you were really smart, and you would have bought it 72.15 when it made a low, but I'm not that smart. I like them trading tight within a base near a moving average. So if you bought yesterday, the low was 82 there, and today, bounced a little bit. Now it's at 86. So that's a nice move. So pay attention to these stocks that have made prior, moves that are trading tight within a base. So that's what I look for with bases. But I'll go over that stuff over the weekend. I'm going to spread out and do bases on the weekend. This is ESTC elastic, and this again is trading tight within a base. Let me go to the weekly chart. Sorry for toggling back and forth here, but I just want to show, this sold off obviously with the Jerome Powell, Federal Reserve induced bear market, right? These things got hammered, formed this little, box, if you will, pattern, and eventually broke out of it and ripped higher. And now it's forming this base, this consolidation. The paint by numbers you can see there is $136. I'm not going to wait for that. It's just, trading tight within a base, which is what I like. And this one, once again, if you're really watching close, and I know a lot of you do, when they pull back to a moving average like it did here on Monday, it pulled back to 112.34, then bounced that hammer candle, right? The closing range is 97%, so that's a good day to buy. Pulled back yesterday, didn't even make it back to the 10 in an inside day today. So just allowing these moving averages to catch up. You can see the the green, magenta, and red, 10, 21, and 50, just trending higher. So this stock is trending higher on the short term. It's rallied off the lows of 92. Looks a lot like, the one that I just showed you, app. just a little bigger spreads there in that one. So the other one that I like that I have on my ready list, I think these are all on my ready list. Monday. Yeah, I mean, this one, you can see the consolidation pattern, but I have to go back to the weekly. Sorry about this, but just to show you, it's got this ability to move, right? Makes this big moves and then consolidates, right? Big move, consolidates, and it's got this little box pattern here. And to me, it hasn't broke out yet. It's still trading near, and that's why I have it on my ready list. But I would, obviously, the closer you can get it to the 10, once again, the better off you are, I believe. And I don't like chasing stocks. That one's 6.1% above the 21 and 4% above the 10. So maybe if you can get a little closer to that 10, but you can see these moving averages are curling up. They're trading higher. So the stock's likely going to go higher unless the trend changes. So Monday looks good to me. Another one that's just driving me absolutely nuts is Spotify. This one is your Axl Rose, patience required here, inside day today. You can see, the higher lows, all the way up here. I'm not gonna, I say this every day because it's just doing the same thing. It's just, I guess you can call it incubating or consolidating, or it's just taking its time. And so if you're an impatient person, this one's going to wear you out. So this is not for you. But if you're patient, just want to hold Spotify and know that it's probably going to be like the Netflix of music, perhaps. I've heard it called that. I wouldn't call it that, but and it's going to have a longer term run. And you're a patient person. Yeah, it's still up a little bit this week, underperforming the Nasdaq, but just trading sideways. That drives me nuts. But like I say, it's not for everybody. CrowdStrike. This one looks fantastic to me. I think this one's getting ready to pop. You got this little pinching pattern here with these higher lows. It's really just a shelf or a box, but it's pinching in really, really tight here near the 10. This thing looks fantastic to me. And if you're, one of these Darvis guys, this is just, it's in a box waiting to bust out of 394. Yeah, it might have trouble with that psychological 400. It also might rip right through there. So it's definitely one that I'm watching. And if we look at the weekly, does it have the ability to move? Oh, yeah, I think it does. So anyway, I'm just waiting on CrowdStrike. You can see its most recent base here. And now it has this 4 weeks tight pattern. I believe, yeah, it'll be tight Friday if it doesn't move out of there. All right. Let me see. I guess that's enough for the software names. I got to go to some retail. I'm just pulling up CROX because I just wanted to point out, the base pattern. People are asking me about base. This is a cup with handle pattern. You can see the handle, the pullback to the 10. This thing just says a cup, but that's definitely a handle. Back to the 10, then ripped up to 165. Now pulled back to the 50 for its first time since the breakout. And that coincides with that old 146. It bounced Monday, then pulled back on Tuesday. And I don't want to see it continue to bounce off this. It needs to stay above. But the problem today was it traded up to the 21 and got rejected there. It made it through the 10 and then got rejected at the 21. So this has some issues. It has some work to do. But if it gets above that 21, which was $150.06 today, you can see it made it to 150.14. It needs to trade through there and back, above to attack that old 160 and then 165.32 eventually. So that's just what I wanted to point out with CROX. Another one is Deckers, which busted out of this cup with handle pattern, if you like those types of things, but now it's pulled back, trading down with the Nike report, which, I don't know about that. You can't argue with the market though. So this one's just selling off. So it's pulled back to its 50 for the first time since the breakout too. And we're just gonna have to wait and see how it performs there. I think today, yeah, traded higher, then sold off near the close. So yeah, these weak closes are no bueno. On holdings, again, taking market share, broke out of the base, made a high of $44. Now it's pulled back to the 50 since the first time, since the breakout, and now it's trading below the 50. So no good for that one. A couple others that I have on my ready list is Burl, and this one's just, again, forming a little box here following its earnings report. Needs to get above that 242. It's got that old buy point there though, so Burl, I think it's just going to move to the beat of its own drum and traded down to its 21 today. So it still looks okay. And then the last one I'm going to show is our friend, the Elf. This one, you have to know the character of your stock, as I always say. Cup with handle pattern, no real breakout yet. I mean, yeah, it did trade up to what, 219 on Monday, then pulled back. You can see that big hammer candle. This one's going to shake out. That's what it does constantly shaking and then moving higher and then shaking out, then moving higher, then shaking you out, then moving higher. Now it's just kind of formed this little box here as it pulled back to the 21. I am interested in it at, if I believe it's going to trade below 200. If I go to the weekly, you can see the consolidation. The old base there was 14 weeks, 37% depth in the base. This is 18 weeks with 32% depth in the base. And you can see it's just a cup pattern now. It doesn't have a handle yet. This week, though, it's down, what, 4%? So it's starting to form a handle, and it might not take that long to do that. So this one moves pretty fast. And you got to be quick. You got to be in it to win it. All right, so that's enough. Oh no, I lied. I have one more. Bros, another one that I really like because of, I think it's still in its IPO or it's just it's exiting its due diligence phase into its advanced phase. It's flat this week, but you can see the earnings going higher, and I think this could have a multi-year run. I'm hoping it does. But definitely, it's a tough business. The retail restaurant business is a tough business. And today just pulled back to its 10. So I like to see them pull in. If you don't own this and you want to own it, you have to wait for them to pull in like that. If you didn't get it out of this base and want to buy it, you have to wait for those pullbacks. Don't chase the spikes. Spikes are for selling. All right. I have to acknowledge the miners today, man. Big move in the miners. Every morning at MC Stock Charts, I post the commodities, and you see those gold, silver, and copper and up in the mornings, man, their stocks are responding today. They were up more than 1%. The stocks responded. This is Southern Copper, up 5.5%. Freeport Mac Moran. Wow, this one closed above its 50, so a nice 4% move. CCJ is a uranium plays. Yeah, that one was only up 1.7%, but these are some to watch now as they try to rally above their 50. This one did. It undercut the 50, now rallied today. A nice 4% move for Agnico Eagle Mines, Canadian explorer of gold. All right, so that's it for me, except for I have a couple more things. One is the cryptocurrency, which I post at MC Stock Charts every morning, has really been slumping, and their stocks have been slumping along with it. This is a MicroStrategy down another $20 today. It had a buy point at 1,700. Now it's at 1,300. Below it's 50. Looking pretty sick here. But they can rally at any time, so I keep my eye on the cryptocurrency stocks. Coinbase closed below the 50 today, and the one that I like, it's a little small fry, but definitely bounces. It moves a lot. That's why I like it. Bounced off the 21 today, down 5 cents. That's a nothing burger. All right. I think it did make a high above the old 14.95 though, did it not? Did it not? 14.95. So it just came up. So the bears are going to be saying double top, right? It's a double top. It's got to go down. There's a top there and a top there. Down she goes. I don't know. I don't know about that. Probably going to go higher. All right. That's it for me. I'm not going to get into the drug stocks, am I? Novo and Lilly were down today. I guess I'll go over this. There was a report that their drug caused eye blindness. I don't know if it was blindness or eye impairment. And so when you own a stock like a drug stock, you're going to get these reports, these big, massive sellers. I remember Lipitor had oftentimes it had reports of muscle failures and kidney issues. That was the best-selling drug stock of all time at that time, and these are going to be the best-selling drug stocks of all time. But if you want to own Novo, I think this is an opportunity. Maybe you get some weakness on Friday and get it closer to that 50. It's 2.3% above the 50. Today it was 135.50 and it traded down to 136. So maybe you get that little push down on Friday. The old buy point there is 137.22, so it's right there. And the other one is Lilly. Same thing with their, the what do you call them, diabetes or weight loss drugs. I know a lot of people on these and never had any problems, but they're not diabetics. So I think it's just a problem with diabetics taking these drugs, and I don't know. The company hasn't responded yet, so we'll see what they have to say, if anything. But there you go. It broke out of this double bottom base, ripped higher. Now it's just supported by the 21. So you can see that Lilly is a much stronger stock than Novo right now. So anyway, I did say that's it, right? So thank you for watching. Have a happy Independence Day. Happy 4th of July. Enjoy the fireworks safely. Except for I lie. I have one more thing in honor of the great Steve Jobs. I got to go through these hardware names because this one's on our ready list. Why? Well, because it had this cup shape pattern, another pattern, right? Not the cup with handle, the cup shape pattern. I would say this is a handle though, as it pulls back to the 50 and then romps higher up to 157. Now it pulls back to the 50 again for the first time since the breakout, right? And those are usually gifts, those are usually buys, right? So I think on Monday it pulled back to its 50, and this is what you want to see from CROX and some of these other ones that I'm showing you. When it pulls back to the 50 there at 127, you want to see them bounce. Yesterday it bounced 1%, closed at 132. Today it bounced nicely another 1.5%, closed at 134.69. So after hours 136. So that's kind of the bounce you want to see. You want to see them bounce through the moving averages, and you can see that still a little bit below them. So it's got some work to do, but I like the bounce so far. And Micron, the other one is Pure Storage, another one that broke out of a base and pulled back to close enough to the 50 yesterday, and it was down 4% on a downgrade. Sometimes stocks are downgraded with an agenda, like so you can buy them cheaper, and that appeared to be what the case was for Pure Storage. Another one in the group was NTAP or NetApp, and this one's just like Microsoft and Google. It's just a Kelly Slater stock, just surfing the moving averages, trending higher. Nothing to do here. I wouldn't buy it way up here, way away from a base, 12.5% above the 50, and 4% above the 21. But man, it's just surfing the 10. And if this is obviously the stronger stock in this group, and it sure looks good, but man, it's tough to buy when they just hug their 10 like that. This is Seagate. Double bottom base broke out, now pulled back to the 21, just kind of forming a shelf type pattern. So to me, that would be like an intriguing time to buy here. At what, 101 is it? Yeah, as it pulled back to its 21 today, 101.27. Yeah, that's kind of nice. The old buy point there was what, 97, 95, call it $98. So it's right there. I mean, if you want exposure to this group. Anyway, that's it for me. This time it's real. I'm gonna go. I have a new, no, I don't. I don't have a new ready list. I have the same ready list on mcstockcharts.com today. I don't know about Friday. I'm kind of poking around, seeing some things that I like. But anyway, I'll post on Friday morning, and then I'll go through the bases, pick out, I don't know, 6 or 7 of my favorite bases and post those on Saturday on my weekend report. And I'll have a new, I'll have a adjusted ready list for Friday morning. Anyway, sorry for the long video, but when the market is good and we're making money and things are going well and the stocks that we own are going up and stocks that are on our ready list are breaking out, we like that. So I'm going to have longer videos and kind of try to expand upon those stocks. Anyway, have a great 4th of July. See you Friday. Never give up.